Okay, click on. Let's do a quick analysis on G concerning yesterday movement. Just just one target to give us at least 108 pips. Okay, so as you can see, I already have this particular chart or this particular trade highlighted on the chart. That is its movement, and I shared an image earlier today concerning this same market when the price was around this area. Okay, so what were my criteria and why did I make these decisions to buy? So I've been on G for a while. As of last week, I was looking for a sell opportunity. Those were from this area. And also, I was even still expecting it to keep selling down to this area, but as we had it, it's reversed from this zone here after clearing the liquidity, taps into equal lows. This is a fully SMC, clear this liquidity, create a new demand zone, and it went up probably 100 and something pips as well. So then you saw how it reversed back. It gave us a good reversal pattern, which we all know as double top. Down, don't let's go down to history. Let's just quickly go about the market yesterday. So fine, we had our Asian session, which ranged from 10 p.m. to 6 to 5 a.m. in the morning. And all it did was reach the lower side. Then immediately after that, it was looking to give a reversal pattern. Why reversal pattern? Why was it looking to give reversal pattern? A minute, please. It was looking to give reversal pattern. The question is, why is it looking to give us a reversal pattern? Because it has been selling and it has cleared all of this liquidity. My other chart, I had the kind of liquidity a trend line drawn also. Now it has cleared all of this liquidity. And market needs to what? Needs to balance itself. So I highlighted this zone here, this key level here, because market has reacted over it. Price has been so sensitive about this area. You can see how it dumped from here, you can see how it put from here, you can see how it reversed from here. And obviously, you can see what happened here. So as on a lower time frame, it was already giving the vibe of a reversal pattern, head and shoulder pattern, inverted head and shoulder pattern. See, as I said on the lower time frame, this 5 minutes. So this was my entry. This was my criteria. You can see how I highlighted this. I drew it out. Why? Because I was expecting market to come over here to come balance it. And see how it reacted. Give us a break of structure, a change of character, an equal low, price closed right around this area, which would have seen as what? A double bottom. But then on a higher time frame, such as 15 to 30 minutes, we would have been seeing a reversal pattern such as head and shoulder pattern. Why? Because it takes a larger or a longer period of time before that information is accumulated or that for it to have make a sense to make a bias as at the time of formulation, at the time of formation, I mean at the time of formation when it was here, would have been looking for the right hand over here. But then there's something like this. There's a left hand over here, something like this. And obviously, this neckline has been broken. That is the bias. That is this eye, this previous lower eye is no longer holding. This is another one that we are looking to respect now. Obviously, and as market came here to balance this, all it can do next is what? Pull up. So I would be sharing my live trade. I rode the market all to this point. All up to this point. I was able to make put like for 300, three to $400 or so. So then I reduced my position. I reduced my position. Why? Because the market was ranging, and this zone is also a key level. So I was looking for market to react off here. Before this market eventually pulled up yesterday, it was close to 6 7 p.m. or so, or 6 7 p.m. our time, GMT. So basically, these are SMC2. Why? Because it cleared the liquidity, tapped into a zone, create a demand zone, and what? It used that to push the market to the upside. And as you can obviously see, this market is reacting upward and other block on another time frame. Another block on another time frame. Look at this other block. Now let's give it a clearer view to you. See 30 minutes. See the other block here. And immediately market came in, see how it reacted. Now what are we looking to do next? Our physical entry from this point will be here, somewhere around here. Why? Our physical entry will be somewhere around here. Why? Because the market will be looking to what? To come give us our right shoulder, our right arm here. And at the same time, clear this liquidity, balance this market and this fair value gap here, balance this candle, and tap into this key level to boost up, to push up. Now, if you had to apply our fib retracement to this, let's apply our fib retracement to this. You can see it's at our 50 level retracement and the market is looking to push back, right? Now let's turn it. Let's turn this our fib. Let's push from the downside to the upside. Why? Because we've been able to measure from the upside to the downside, its movement from the upside to the downside. Now we're looking to check its movement from what? The downside to the upside. Let's see areas it will be looking to react from. Now look at it. A strong 79 position, a very strong 79 position. That's high possibility to react off our 79, which what? To clearing what? A liquidity, balancing a fair value gap, tapping into a key level, and also respecting our fair value, respecting our Fibonacci retracement. I know it's all kind of confusing, but just look at this. Look at see the calibration. On getting to 50% retracement, pull down. Now, as it's pulling down to give us a consolidation movement, to give us a balancing, to give us a to give us a pullback. Where will it be pulling back to? Now that we would obviously be having a standard head and shoulder pattern. This will be an inverted head and shoulder pattern. You can see this is the head, this is the right arm, this is the left hand, I mean, and this is the right hand that you are looking to form. So what we'll do now is ride this market or ride this same GU to this point over here. We're looking to ride it to this point over here. So anything it will probably be doing will be what? It will be microstructures movement that can easily be traced by algo market structure. Look at this. So let's say it's probably pull up to this area, then start coming down. So we can play with, something around 50 to 60, yeah, 50 to 60 pips around here. But then the bigger picture, what we're looking for is what? A good buy. A good buy. Now, of course, there will be some paparazzi around here. Why did I say paparazzi? Because it's a market for kind of loud. There will be manipulations for, of course. There will be manipulations, of course. It can't be just as exact as I'm drawing it to you. But this is the idea. This is the bias. This is where we are looking to put our entries or bank on this particular trade. So that will be all for now. See you. We see again. Thank you and have a good day.